Hi there and welcome to the week ahead video. Now, as we look at the week ahead, the question is, why are we looking at these data points? What's the purpose of it? Is it just to sort of broadly understand the market? Is it just to have good analysis? The reason we look at these events is to find high probability trading opportunities where we are really looking at the market heading in one clear direction. And this last week, we did have an opportunity on the Canadian CPI data. And here's just a refresher as to why we're looking at these economic data points. Now, on 20th of February, we're looking at this Canadian CPI print. Now, remember, we follow our three-step process. We want to see what the baseline was, what would be a surprise, and what would be the bigger picture. Now, going into the event, the baseline was really clear. The Bank of Canada was responding to an uptick in inflation for December, which came in at 3.4% year on year, above the prior of 3.1%. And they'd said that they were worried about the persistence of inflation and they warned about cutting rates prematurely. So the best opportunity that we could see here would be if the Canadian inflation data showed a surprise drop. That would likely see the CAD weaken significantly out of the event. And at the time when we were doing this, we were looking at the weakest and strongest currencies of the day, and we saw there were two opportunities here. The dollar CAD is just a go-to pair for dollar CAD upside, and the euro was one of the strongest currency pairs with a reasonable spread. Sometimes in New Zealand or Aussie dollar CAD, you can have a wide spread. So euro CAD or dollar CAD upside was what we were looking for if we saw a miss. We needed to see month on month below 0.1%, year on year below 3%. And in the event, what did we see? Month on month below 0.1%, coming in at 0%. Headline coming in 2.9%, below the minimum expectations, and the prior median revised lower, and the median trim common all below the prior, core 2.4%, and the month on month 0.1%, which on balance was a significant drop in the inflation print. We could see what analysts were expecting. That was the spread of distribution. No one was expecting month to month 0.2. No one was expecting CPI inflation to be below 3.1. So below 3 for the year-on-year headline, below 0.2 for the month-on-month data was a good surprise. So what we were looking for, Euro CAD or dollar CAD upside. So trading after the event, you can see just, we took an immediate long Euro CAD and most people managed to get a decent run of pips out of that. We'll consider re-entering if you go down to that 14586 on the Euro CAD. And you can see the dollar CAD, people who took that trade, again, good opportunity and a retracement opportunity here at the 1.8499 region, not an unreasonable area for potential dip buyers, even at this stage with stops below the low. But either way, you can see that by looking at these hotly anticipated events and doing the analysis beforehand, you can see when you're looking at these where the surprise opportunities are going to be. So there's just a quick opportunity that we had this week on the Canadian CPI data. Remember, you can follow along with us live as we do these many times during the year and a few times a month. Okay, without further ado, let's get stuck into this week. Now, it is a very interesting week that we've got coming up, and the week starts quite quietly with new home sales, not expecting any major moves from that. We've got Japanese CPI data, not expecting any major moves from Japanese CPI. However, if it comes in above market's maximum expectations, that will start to increase expectations for that yen strength to return. We've seen it been pushing back, particularly with 10-year yields pushing higher, and that's been allowing the yen to weaken, particularly through the back end of last week. But if we start to see Japanese inflation surprising to the upside, that will increase expectations for the Bank of Japan to exit negative interest rates and should support the yen, certainly for a short-term opportunity. But we probably won't get a tradable opportunity there, but we will cover it in our cheat sheet anyway. Then we come through to Tuesday, got US consumer confidence, not really looking at that. Bond auction, just got to keep your eye on the bond auction to make sure there's plenty of demand for bonds. If there isn't demand for bonds, then you can continue to see yields push higher and that can strengthen the dollar, always worth being aware of. On Wednesday, we got some very interesting data points. These are the most interesting ones. Aussie CPI and RBNZ interest rate decision. The New Zealand interest rate decision is the one that I'm really interested in. And you can see here that economists surveyed, only out of the 28, only one of them has expected the RBNZ to hike rates by 25 basis points. Building up over the last few weeks, we've had a series of investment houses expecting the RBNZ to turn more aggressive on rates. And if you look at short-term interest rate markets, you can see that expectations have just been edging higher that there'll be an interest rate hike. Now, there's only 29% chance of an RBNZ interest rate hike seen for the Wednesday. So if we do see an interest rate hike, we know that actually there's a lot of pricing in that needs to be done in the New Zealand dollar, and only one economist expected a hike now. Now, will it change the outlook? Not necessarily. The Aussie and New Zealand dollar have both been benefiting on that wave of optimism post those Nvidia earnings. We recognise that would probably lift sentiment. It's turned markets much more risk positive. That tends to benefit the Aussie and the New Zealand dollar. So we've seen a bit of upside there. And there's been expectations that the RBNZ maybe have one or two possibly rate hikes left in them to deal particularly with domestic core inflation. So although it will be a surprise and it will be a short-term opportunity for New Zealand dollar strength, probably best expressed through an Aussie New Zealand dollar short, we will have full details on the cheat sheet. It's not one to necessarily hold, because the RBNZ will eventually be getting very close to their peak interest rate, and we may even have a pushback against this expectations of higher interest rate hikes. So that'll be very interesting to see the press conference, which comes an hour afterwards. So the forward guidance will be important there, but that's certainly an important interest rate decision. Could give an opportunity for a short-term trading opportunity. We'll have full details on our cheat sheet nearer the time. We then have to be aware we've got some inflation data coming out during the week from France and Germany, and that will play in to the CPI print at the end of the week. So just to be aware, French CPI data is coming out on Thursday, and the German CPI data is coming out on Thursday as well. So if we see this inflation data surprising strongly to the upside, then we could potentially look for some short-term euro strength opportunity. However, the main event of the week is the US PCE print. This is the big one. If you look at where the Fed are in terms of their interest rate hiking prospect cycle, they've essentially said that's it. We've hit the peak of the cycle. We're not expecting to hike rates anymore. They are expecting to cut rates this year. The Fed themselves projected 3 rate cuts. And unusually, we actually have short-term interest rate markets in a period of agreement with the Federal Reserve, and short-term interest rate markets, they too see around 3 rate cuts into the end of this year. Now, the recent data we've had out of the US has been making markets think maybe inflation is more problematic in the US than we initially thought. We had a very strong non-farm payrolls print for January. We saw December's payroll numbers revised higher. We then saw strong US CPI data. We saw strong US PPI data. And since then, analysts and investors have been thinking, well, perhaps inflation is more problematic. Now, this is the Fed's preferred measure of inflation. So if we're going to get some dollar moves, it will come from an out of consensus print here and can be a great opportunity in the Euro US dollar, in gold, and potentially in stocks. But Euro and US dollar and gold will potentially be the best opportunity. So what we're looking for here is something that either surprises to the downside or the upside. Both will be fine. Ideally, I think both are equally good, with the Stir market pricing and the Fed pricing being virtually identical. Anything that pushes the expectations towards sooner rate cuts or potentially another rate hike, both of those options would give a decent short-term move in the dollar. So in terms of expectations, the year-on-year data is expected to fall from 2.6 down to 2.4, the core down from 2.9 for 2.8. So the biggest surprise would be something that goes back in the other direction. Dollar strength, and particularly selling something like gold, particularly with the weak, seasonal perspective there is for gold coming into the end of February, early March. There is a bias towards gold downside in the start of March, end of February. So a great opportunity would be if we see this coming in much higher than markets expecting. If you've got the year on year coming in, 3%, you got for the core reading, you got the headline coming in 2.8% and a beat across the board, then that would be a decent opportunity to sell gold and to sell the euro US dollar on that dollar strength. Got some Canadian GDP coming in, big miss there. That could give us a little shift in the Canadian dollar after the very weak CPI print we've seen there. Slowing growth in Canada could be a nice opportunity for further CAD weakness. And obviously if you get very hot PCE print, very weak CAD GDP, then dollar CAD upside could be a great pair to choose. Then going into the end of the week, we've got those French, German PMIs. German manufacturing, really disappointing markets. The latest PMI print out last week, remaining the black sheep of the Eurozone. Germany is struggling in that recession mode, and the latest PMI prints didn't give much hope. And the business climate IFO survey, some reasons for a little bit of optimism. Probably the worst is behind the Eurozone, but German data will continue to be important. And the Eurozone inflation data, we should have a sense of what that'll be with the French and German data out earlier in the week. ISM PMI prints can be interesting. We'll have that covered, particularly for an out of consensus print, but we'll need to see what goes on with the PCE on Thursday. So you're summarizing it all up, really, it's the RBNZ interest rate decision, and it's the US PCE print that's the best potential opportunity. And of course, we'll keep everyone updated on the cheat sheet with exactly what moves we're expecting from which currency pairs as we head into those events. And so I hope you have a very good week.